Hello traders, welcome again to my channel. Today we will be talking about risk management. Today will be completely audio. This is one of the simplest concepts that you can learn about trading. But as we all know, putting it in practice is what's very difficult. Before we start, I would like to share something. The stock market, in my opinion, is built to build wealth. At the same time, it has a mechanism in which those with the less knowledge and skills end up losing. In my opinion, we as retail traders have a huge disadvantage. We are not market makers. The quantities that we use to trade do not influence the price change that we see in a stock going up or going down. It is only the accumulation of other traders, especially big traders, or as they call them, market makers, that make those movements possible. You also have to have in mind that most of the trading is done by computers and mathematical equations, or algorithms, or algos, as you hear. Having said that, when it comes to retail traders, price movement moves because of two things. One, greed, and two, fear. Greed and fear is actually what makes the 95% of traders lose. Risk management for me means the following. Be aware of the market conditions. Is the overall market bullish or bearish? Time frames. Stock, is it trending up or is it trending down? Are you considering level 2 and spreads? Are you looking at the ask or the bid? Basically, are you paying attention to the candles? Are your candles a 1 minute, 5 minute? Are you looking at your indicators? Are you entering into the first candle, green candle, the second green candle, the third green candle? Is this the 10th green candle? Are you trading pre-market? Are you trading the open bell? Are you trading 15 minutes after the open bell? Has the stock halted during the day? Does the stock have good news? Bad news? No news, but a lot of volume? Have you considered the price action? Are you aware of what is going on before you decide to place a trade? Are you aware of which battle you are entering and timing your entry so that your possibilities of coming out alive is greater? Or are you blindly jumping into a battle with blindfolds expecting to come out ahead and victorious? There is truly no success in anything without some type of preparation and a good scan of the situation. People like to call this due diligence, or DD. Some successful traders spend hours with their own DD and others spend a lot less time. That's myself. And I aim for smaller rewards most of the time. There's not one set amount of time for due diligence, but it is absolutely necessary. Buying a stock because somebody mentions it and not doing a quick due diligence is, in my opinion, gambling. It is important to mention that the market has a certain randomness to every single one of your trades. No matter how much you know or try to predict, the outcome is always what it is. Random. Randomness is okay. It's part of the game. It's being able to manage that and make it work in our advantage that will really make you a profitable trader. The other aspect of risk management is being aware of the value of your account. It means knowing exactly how much money you have available to trade and calculate exactly how much you are willing to lose in each trade, each day, each week, month, etc. It also means how you manage each trading situation in every single second. By that I mean knowing what the appropriate size or amount of shares you buy will be depending on the actual trading moment. Are you in pre-market trying to trade? Okay, well I know that I won't be able to set a stop loss or have a guaranteed exit in case of an emergency. As we all know, in a pre-market trading, you're not able to place a stop loss. You're only able to sell your stock as a limit, and being filled is never a guarantee. For pre-market, I usually have a small entry to protect my account in case things go south and I'm not able to sell my position as quick as I would want to. That small entry is determined by an amount of money I am able to trade during one given day. I will use the example of $1,000 like I have always done. If I am in pre-market and see a good runner for an alert, I place an order of either $100 or $200 depending on whether I am in a pullback or not. In case of a huge drop, let's say 20%, then my loss will only be around $20 to $40. Now a 20% drop is very rare, but it's also possible. If that happens, then I must adjust my risk management for whatever trades are left. Let's say I do get a loss of $20 while in pre-market. Based on my risk management, with my $1,000 to trade for that day, I would only be allowed to lose a maximum amount of about $10 to $30. That would mean that my risk tolerance was to only allow to lose about 5% of my 1,000 trading allowance for that day. This is a rule that I have. I will only allow myself to lose a specific amount each day and not more. This helps me prevent revenge trading and the possibility of blowing up my account. We have all done this. Every experienced trader has done this. You're losing on trades and you want to get that money back. Well, guess what? The market does not care about your losses. Your next trades could easily be more losses. If you're struggling with trading, like I used to, concentrating on this aspect of trading is extremely important. When I was at that stage, I had to forget about getting rich, about making that crazy money. I had to concentrate on my real issue, which was holding too long to losing trades and letting them go way too late. At the same time, those lessons were worth every single dollar. It helped me really start changing my mindset in regards of risk and protecting my hard-earned money. Another risk management thought that I would like to share is the one of winning trades or streaks. This can also be very difficult to manage. How often have you had a great trade just to see it all go away in your next few trades? I am very guilty of that. Emotionally, it's super hard for me when that happened. I am very guilty of that. Emotionally, it's super hard on me when that happened. After almost 2 years of trading, I reached a point where I said, enough. I told myself, what the heck can I do to stop this behavior? I came up with these risk management strategies. Before trading, I wake up early, most days, check for any alert or possible runner. I look at my scanners. I get to my trading space and I see the money that I have available to trade or how much of my money is settled. I then set myself a goal of making a certain amount of money or percentage for that day. I make this goal very low so that I can attain it every day if possible. Back to the $1,000 example. I set a goal of making $50 to $100 each day, basically to catch a 5 to 10% run. And with a penny stock, as you all know, totally possible. Let's use the $50 minimum example. $1,000 a month that I can grow my account. That $50 goal is usually surpassed. Everything needs to be put into perspective. There was a time in my trading that trading got even more difficult, where my goal went down to $10 a day. I did not move from that $10 a day until I could prove myself that I was able to control my emotions. I am now hitting my goal almost every single day for a while now. It is amazing the results that I am seeing compared to the bigger gains followed by the roller coaster ride of my account going way up and then going way down. It's okay for the account to go down. That is something that you must understand. It just needs to be managed and proportionate to your risk management strategies. Your losses should always be smaller than your gains. Now, when I hit a great trade and make above $50, when I hit my goal, and let's say I make my $50 for the day, from $50 to $100, and I have the desire to continue trading, I will continue trading, but only if I allow myself to lose 25% of what I already made. Okay? Let's say you made $100. I will continue trading until I am down to $75 profits. meaning I've lost 25% of my previous profits, and I will stop right there. All of those risk management strategies need to be in my head every second I am making a decision while in a trade. Every single second. Another thing I try to avoid is trading a big position after winning big in a big position. If I continue trading, the size is always way smaller. It does not matter how much the stock keeps running, I would grab more profits but with a smaller risk than the first winning trade. Alright traders, the most important is that you protect your trading dream by finding ways around the huge disadvantage of being a retail trader. I will be sharing more about risk management while breaking down my weekly trades. Look for the link below for those alerts. Also, don't forget to join the Facebook page. Thank you all for watching. Make sure to subscribe, like, and hit the notification bell, and I will see you next week. Adios.